Hi everyone. We already understood the concepts under Ind AS 20, which is accounting for government grants and disclosures of government assistance. We would like to apply the learning from those concepts with the help of several questions to test our knowledge and understanding. We have provided this information where it says that Grow Limited has received the following grants from the central government for its newly started vertical farming business. 40 lakh rupees received for immediate start of the business without any condition. 1 crore received for R&D of seeds and materials required during the farming, subject to following conditions, right? So we have this first grant, which is without condition, second grant with conditions. The conditions are seeds and material should be available to the public at 25% cheaper price from the current market price, and they should be in accordance with the quality prescribed by the Ministry of Agriculture, right? Then we have a grant 3, which is 4 acres of land with a fair value of 20 lakh rupees received for setting up of infrastructure without any payment, right? So there is a condition, by the way, which is setting up of infrastructure. And now we have also the fourth grant, which says 4 lakh received for purchase of machine. Now, this is again a condition. So there's a machine which is a cost of 20 lakh rupees. 4 lakh is given by the government as a grant. The life of the machine is 10 years. Depreciation is charged on a straight line method. Assume no salvage value. The question's requirement is you are required to determine how should Grow Limited recognize the government grants in its books of accounts. Now, if you recollect the concept of recognition, right? What does recognition tell you? Recognition principle says that there is a reasonable assurance that the conditions related to the grant will be met, right? And the second condition is that the grant will be received, right? Now, interestingly, this condition is not a problem because Grow Limited has already received that money, right? So all we are looking at, of course, whether the first condition would be met or not. So we don't know that answer. We can assume if it is met, then naturally the recognition of a grant can be done, right? Now, if I look at each of these grants one by one, right? Let's deal with them and see to it. How do we look at the accounting and the recognition part of these government grants? The first grant of 40 lakh rupees is received without any condition, right? Which means that if I look at my first grant of 40 lakh, I can safely say recognize it as an income since there are no conditions attached to that grant, right? It's a lottery for you. You would simply call it an income straight away, right? As far as the second grant is concerned, which is about 1 crore rupees for R&D of seeds and material, this is essentially in the nature of an income grant, right? Because you will be conducting some R&Ds for the seeds and fertilizers. And there are two ways you deal with this kind of a grant. Either you show it as an income separately from the expenses that you incur for the research and development, or you simply deduct these from the expenses. It's purely the presentation requirement. Okay. So when you receive this 1 crore on the day one, you refer this as a deferred income and you release that to the profit and loss account. You create an income out of the deferred income, either as a separate item in your profit and loss account as an income, or you deduct that amount of income, right, from the expenses. Now, when do you do that? We do it on a systematic basis. All right, so you have got this grant 2 of 1 crore, which you on day one show it as deferred income, and you can either show it as an income or you deduct it from the expenses on a systematic basis, assuming or provided that there is a reasonable assurance that the conditions will be met. All right. Now, the grant three, which is a grant received in kind. So the government has given you a 4 acres of land, which is a fair value of 20 lakh rupees. Now, how do we classify that? So we are saying that this is my grant three of what is the value? It's 20 lakh rupees. Okay, so this value of 20 lakh rupees, it's basically an asset grant, right? Received in kind. You normally would be showing it at its fair value and you call it as a deferred income again. All right. Again, the grant has to be released to the profit and loss account. You have to create an income again on a systematic basis. That's how you would start dealing with that part, right? Now, as far as the fourth grant is concerned, which is of 4 lakh rupees towards the purchase of a machine of 20 lakh rupees. Again, this grant, by the way, is an asset grant. And for this, again, you have two choices. One is either you show it as a separate as deferred income and you recognize an income over 10 years. That's the useful life of that particular machine, right? Which means 40,000 rupees per year is the income which is shown in the books, right? Alternatively, you have a choice to deduct from the cost of the asset, right? In the first case, the asset will be shown at its original cost, which is, by the way, 20 lakh rupees. All right. So what we are allowed to do as a choice that the asset will be shown at 20 lakhs and the grant is shown at 4 lakh, right? Alternatively, you have a choice where you can show the asset net of the grant value, which is at 16 lakh. Of course, the depreciation will be charged over 10 years, the way it was being charged here as well, right? So this is how you are allowed to recognize the government grants basis, whether there are conditions attached, whether it's a income grant or an asset grant, as the case may be. All right, let's have a look at the formal solution here. We are saying that Grow Limited should recognize the grant in the following manner. 40 lakh is received as without conditions, so it would be recognized into the statement of profit and loss immediately. 1 crore received, 1 crore rupees should be recognized in P&L on a systematic basis over the period in which it recognizes the expenses. So that is how you start looking at it, provided there is a reasonable assurance that the conditions will be met. The land, which is the grant received in kind, is recognized at its fair value, and accordingly, you show a deferred income for that. And finally, 4 lakh rupees is recognized as a deferred income and will be released or transferred to the profit and loss account over the life of the asset. Alternatively, you have a choice to reduce the cost of the asset in this case. All right, we are given this scenario where it says that Sun Exporters Limited has received the following grant from the Government of India. Exemption of custom duty on capital goods with certain conditions related to export of goods under the EPCG, Export Promotion Capital Goods Scheme of the Government of India. The question says you are required to determine whether the same is a government grant, which is basically whether this incentive meets the definition of a government grant. That's the first condition, right? The second part is if yes, then how is the same to be accounted for if it were a grant related to an asset or a grant related to an income. So the second requirement of the question is you need to also explain the meaning of these two types of grant, right? Pertaining to an asset or pertaining to income, and finally the accounting thereof, right? It's a comprehensive question in that particular manner. Okay, so essentially when you look at the definition of a government grant, how do you define that? We say a government grant is basically a transfer of resources by the government in lieu of past or future performances, right? So normally the government would transfer resources to an entity and they expect that some conditions, right, the performance, to be met, or they might have already been met. That's where even a past condition can become an example of a government grant. Now, considering this, right, the given example, the EPCG would be an example of a government grant. Clearly, there is an incentive and there are, of course, conditions attached to that. Okay, now the conditions are basically for capital goods and export of goods in future. You create a capital asset. That's the wording that's being used, capital goods only. So use a capital goods as a wording, and of course the expectation of goods in the future. Now, importantly, when you look at the the definition of what is a grant related to an asset, let's talk about that now. We say a grant related to an asset. We say that something which is meant towards procurement, construction, or purchase of a long-term asset, something which is meant for creation of a non-current asset. And usually there are conditions attached with respect to the use or location relating to that asset, right? So we are trying to define what is a grant related to an asset. Okay, now the easy part is the grant related to an income are those grants other than those related to assets. That's how you start defining, for example, a grant related to income. Okay, now the question is that what if you look at this incentive, how do you treat that if it were a grant related to an asset versus if it were a grant related to income? Now, both these methods, both these types of grants result into two ways of accounting. One is if it were a grant related to asset, it can either be shown separately as deferred income and transferred to statement of profit or loss on a systematic basis. This is the fundamental, recognition criteria within the, the Ind AS 20. We say that you recognize a grant, for example, on a systematic basis, right? Alternatively, it can also be reduced from the cost of the asset, right? So these are the treatments which are allowed. Alternatively, you can either use the first criteria or the second criteria to account for the grants related to asset. Likewise, grant related to income again can be shown separately as other income, or alternatively it can be deducted from the related costs over the period. Now again, the fundamental aspect of course, systematic basis is applicable in this scenario as well. All right, that's how you start dealing with the requirements of the standard in this scenario. Okay, now let's have a look at the formal solution. We are given that government grants are assistance by governments in the form of transfer of resources to an entity in return for a past or future compliance with certain conditions relating to the operating duties of the entity. They exclude those forms of government assistance which cannot reasonably have a value placed upon them, and transactions with government which cannot be distinguished from the normal trading transactions of the entity. Accordingly, in the given example, exemption of custom duty is going to be an example of a government grant, and accordingly, of course, the treatment is done under the provisions of Ind AS 20. Definition of Ind AS, the definition of grants related to assets and related to income is also provided. Grants related to assets are government grants whose primary condition is that an entity qualifying for them should purchase, construct, or acquire long-term assets. There could be subsidiary conditions with respect to the type of location or the period over which they will be acquired or held. The grants related to income are those grants which are not the grants related to the assets. All right. Now, in the given scenario, of course, we mentioned that it could be either an example of a grant related to an asset or a grant related to income. So accounting for such grants should be done. Likewise, presentation of grants related to assets, they shall be presented in the balance sheet by showing it's a deferred income, and accordingly you recognize it on a systematic basis over the life of the asset. Alternatively, they may be reduced from the cost of the asset. Exactly the same thing that we mentioned. Similarly, something related to income, they may either be shown separately or they are reduced from the reported or the related expenses. Okay. Again, I think the fundamental aspect of systematic basis is always going to be available. So in this case, we say it may be further noted the government grants, as in the given scenario, should be recognized on a systematic basis over the periods in which the expenses or the costs are recognized. If based on the terms and conditions of the scheme, the grant is to compensate the import cost of the asset, the capital goods reference that is there, subject to an export obligation, this is going to be linked to the fulfillment of associated export obligations. All right. Thank you very much.